Hey everyone, welcome to your daily update for Sol and BTC. So here we had that pretty big dump, and then we were wondering, is it over? And then no, it wasn't. So we had a little bit of a dump, and I guess the question now is it over? Same question every day. Looking at the one-day liquidity, the answer I would have to go with is no. They've spent too long at these prices, and they haven't taken it up fast enough. There is plenty of liquidity showing there back down sub 100k. Sol, could easily dip back to that sort of 150 or lower. And people are getting very bullish very quickly. Everything online is bullish. Suddenly there's, XYZ token is going to go to this and blah, blah, blah. I do think we've got some targets, higher targets. And I reckon we're going to get them. But I think that there might just be, I hate to say it, one more flush. So it'd be nice if I'm wrong, but we'll have a look at the charts in a minute, and you'll see that there are some levels that they just really need to get over today. Now, if we look at the 7-day liquidity, then yes, there is stuff to take to the upside, and it lines up with all our targets, and that's all good. But unfortunately, as you can see, there is still stuff to take to the downside. If we look at the 30-day, 30-day would indicate, yep, there's plenty there to take to the upside, but nothing stops them taking BTC back down here to this 96 level. In fact, yesterday we showed the charts that explain that and why that is likely to happen. Also, I put some stuff in the Discord, various different timeframes they created yesterday that are what we jokingly refer to as a schlong, which is where you are able to short down into your long. And yeah, all the structures there to do it. It's just a case of, does it happen now or does it happen after a blow off top? There is one time frame today, which is the 103-day, which pretty much shows exactly what could happen if we close a bubble below a certain level on BTC, and it covers both ends of the spectrum, e.g. Another dip and another revisit of all-time high. As well as potentially where the blow off top would be at a retest of the prior broken trend from the last bull cycle. Last bear market. Okay, so that's liquidity. If I had to put some numbers on it, I'd pretty much just say easily justifiable to take everything down to 96, and likewise pumping up to 105 would make a bit of sense. It's really about how it closes as to whether it gives continuation or what it signals for the future. And if I had to put some numbers on Sol, then Sol's got good strength over BTC at the moment because of those Sol BTC charts we showed recently. So I'd still put that maybe we're going to 174 at the top side, and yeah, we could easily go back down into the low 140s if BTC takes a tumble. Because although the liquidity doesn't necessarily look like it's there on Sol, it's just if BTC really does take a big dive down to 96, then we've got levels down at 144 and 141 on Sol that could basically bounce us up to an all-time high. So let's have a look now at the charts. So starting with Sol BTC on the 1-day, we may create an engulfment today. It's not the strongest type of engulfment at this stage because it's just kind of barely above the body, but it's certainly better than no engulfment. So if we close over 15581, then you could be a little bit more positive. It's also up inside the range trend, which is probably more important than the actual engulfment itself, because if it gets back up or stays up at this level inside the range trend, it's more likely to go up. What we really would like to see is it close up over this 15727, because that's the actual move that it's in from back here on the daily. So we are inside bigger stuff, and what we just want to see is we want to see the lower time frame reversing, because we've entered things like a 3-month support. So the next thing is you want to start to see the daily reverse and start going up. You want to see that turn into a weekly, etc., and keep going up. So yeah, as it stands, not too bad a close, but we do have some resistance just right there at 15767. And as long as we stay above the range trend is going to want to target the hold level up here in the 16590 area. So all of that is showing that we're closing potentially in a good spot as long as it stays up. It could go down again. I don't like the fact that it moved the trend and didn't bounce the trend. So when this trend down the bottom here got relocated, it didn't actually bounce off it, which quite often when that happens, at some point in the future, they'll go back to that trend, hit it, and then move up to the hold level. So it does sort of show that there might be another quick dip. It wouldn't be a big dip. It would sort of just be a test of the move of the trend that got moved. Okay, so looking at the weekly is just retracing back up, so it's following the rules. Believe it or not, there are some rules for charts. Some can be bent, some can be broken. Good old matrix line. But yeah, we've got 4 days to go on that. Landing on the retest of the prior broken trend from above the horizontal levels means that 14753 on the weekly, the candle is going to, over the week, try to pull itself back up. Now, where it closes, if it ends up closing underneath some of this resistance, like hypothetically, if it was to close here today, then the range trend could be problematic at 15801. But at this stage, it's got a bit of time to go. And then if we look at the monthly is still trying to push up to the 16435. So Sol should still have good strength as long as this move is in play. And the 3-month is landed on support, and it's trying to push up here to that 0.001652. So once again, as long as that stays in play, it can combat to a certain degree the drop in BTC. So if BTC does have a big dump, it may not be as bad on Sol because the support that's currently in play. This equivalent support level, just to put it in perspective, is 93,570 on BTC, right, as a US dollar price. So, if BTC does hit that and Sol is in this, then when BTC flies up after hitting 3-month support, Sol would just have an exponential fly up at the same time. So, okay, let's have a look at these safety assets. Okay, so this is what we wanted to see yesterday. We rejected off the old range trend, and we've pulled back underneath the origin levels. So we're pushing back down. Now, the level that it's on here at 68.05, this is not a high time frame support or resistance level like the one above. This is just sort of like a standard support level or a break level. So if we push back under that today, that'll be good. It would also be creating a hold level, and that means it's going to most likely, getting lots of words, most likely come back down and test the prior broken trend or something else down here. Now, unfortunately, the 67.18 is a high time frame level, so that one, which has confluence with the trend support tomorrow, would likely give it a bounce. So as far as how you would read into this, you would say that if they close it under the 68.05, then you might get a little bit of a pump in altcoins as this rejects down, but it's almost certainly going to hit this trend confluence with a break retest. I mean, it should just be coming here anyway. There's a whole bunch of stuff it needs to retest, and even that would just be healthy, right? So if it does this and comes down here, the problem is it's retesting these as support, and then it could bounce. So yeah, you would have to say that when the alts start to pump, or if they start to pump, when this hits these levels down here, you start to fade that pump, right? So that's and that would be about that 67.18 level. Okay. So looking at it on the weekly has hit the high time frame resistance level. So it is pulling back, and it started on the underside of the trend. So over this week, much like you saw the Sol Strength should be trying to pull up, this has got a bungee cord attached to it, and the trend is trying to pull it back down. So everything's kind of confluent with a little bit of a rally, but obviously it can be short-lived once it hits these levels. So, and if we look at the monthly hit the origin resistance level, so that's that is high time frame resistance. It hit the backside of the trend, and that's most likely going to try and push back down to the prior trend, which is about that 65, right? So overall, we're seeing that strength could start to shift back into alts, and it should, because they took an absolute punish, in some of these recent dips. So it's because the stuff, as it goes up, they get punished. As it comes down, they show strength. Okay, let's have a look at these totals. So on the daily, the total is looking all right. If it closes over this old support resistance level back here at about 3.12, if it closes over that, then it's still got a little bit of room to move into resistance. It basically balanced the candle. So what happened is it bounced off the support and it came back up to the wick of the prior daily candle, which is more or less just fixing the fair value gap or fixing the imbalance. Now it's about how does it close. Now, if it closes here, we get the creation of a downtrend. However, if it closes above that 3.12 level and creates the downtrend, it can open the candle on the next side of the downtrend and try to push up. Now, it is a bit too far down as far as the range trend goes at the top. So that's about 3.21. Once it hits that, or even there is another level in here, which is a slightly newer high time frame level, which is about 3.18, which it hasn't technically hit yet, because that is the wick that's creating this little pullback. So it may open above the support, make a move up to either the 3.18 or the range trend at about 3.21, and they're both areas where you could then get a rejection. This has also not tested the trend at the bottom, and range trends are effectively horizontal levels, but they operate on a diagonal, so they're kind of like a floating horizontal level. So if it hits that range trend, it should try to attack a diagonal level, which is a standard trend. So it could find support on the backside of the new trend that it's created today, which would be a really, really bullish scenario, or it's going to dive back down and test the trend down here at the 2.95, and that's going to effectively be like a double bottom. So that's what I'm watching on that one. Okay, and the 1 week is still doing its thing and pulling back up as it should be. And the 1 month is pulling back up as it should be, which is kind of good. The only thing I don't like about this is it's the October 10 candle that actually did this retest, and I found a lot of these October 10 moves are getting repeated. So this current monthly candle has not done the retest of the range trend, so it's just got a little suspect thing in the back of my mind that it's going to dip down again. But we just don't know. All we can do is wait and see. Okay, so let's have a look at Sol. Okay, so Sol on the daily, we really want to see it close over that 163.347 at a minimum, because that means it's back up inside the range trend. Anything more than that, great. If we can get above the candle body, which is more like about 166, then bonus. If we can get above the wick and back above the resistance level at 168.290, then hey, even better. But we don't really want to go below the 161.041 or the 159.555, because these are all kind of areas that should currently be acting as support. It's totally fine if we close above them and then dip back down on some kind of retest of trend or double bottom, and you can see that just about every single chart we look at, it has not retested the trend, so that's a sign of a double bottom. However, it's also a sign of trend strength. So there's two things you can kind of take from this. One is that when price fails to distribute back to a level after a level is created, it usually means that level is very strong, because it was so much strength that people just started buying even though it didn't test the level. And so what that does mean is that if we can close above some of these supports and take a dip back to that trend, which is around the 140s, 146 technically, then that trend should be strong. However, what the whales are going to do, most likely, is they will sweep that trend, because an area of strength is an area of opportunity for whales to liquidate everybody who's got their stop losses below that. If they believe that trend is worth longing, they will have all of their stops and liquidation levels down in this little area below, and it will sweep it. And then what we can see from that is we can see there will be a big move to the upside coming. So often you find that, you've probably seen examples in some of my other videos where the trend doesn't look like it's the lowest candle. The trend looks like it's something slightly before or after the lowest candle, and that's because often they sweep them. So even though the price action right now as we're doing this does look pretty bullish, but we're in between markets, so this is where whales kind of play and mislead people. Okay, that's as far as upside targets for this level. Once we run into this group of broken but untested high time frame resistances up here, which pretty much start at about 173.5, then you'd have to expect that they're going to put up a bit of a fight, because they're pretty old, they're pretty big, and anything over 173.5 is pretty much decent resistance, and it's our downtrends as well that we have to overcome. And we've been in that downtrend since the last local high. So yeah, that's pretty much it. If we close over these levels, we could push up. There is still that resistance there at 168.290, which has created this whole rejection. So ideally it'd be over that. We got range trends. Everything I kept seeing pretty much has confluence with about 174, or 173.5 in this case. It might wick up above that. We do have some other levels in play, much bigger levels that show us going back up into the 190s or larger. But for now, that's what the daily's showing us. So if you're just trading on the daily, that should be the range you look at. Okay, let's have a look at the 3-day. So 3-day really wants to get back over 166.6 for the range trend, get back up into that area. And then the next one is up there, funnily enough, at about 174. So it is possible that we work through a range trend, hit the 174 target, and then come back down again. The actual trend, and that's what I meant there by a sweep of a trend. Normally you would do this before you have a large move. Okay, now that trend is the trend running through here. We haven't really done much of a sweep of it. As you can see, it's not huge. So it's still in the back of my mind that BTC goes down to that 93, 96-ish. There's a few levels down there, but it could go down to those areas. This could then sweep this trend. That could be the proper bottom, after everyone has called the bottom. So just be careful still. I always say be careful. Right. As far as rejection levels, if it closes where it is, it's in the middle of support and resistance. Bullish would be a dip back to about 157 and then a bounce up to 166. Bearish would obviously be BTC tanks, and it goes all the way down, does the sweep, and then that would take it down into the 140s at least. Also just got to be very aware of things like 3-day range trends down here at like 128. But yeah, you just never know. You never know. You just got to be on the charts. You got to see it, and if you see the candles starting to move, you just got to be ready to hedge or invalidate your thesis that it's going up, and etc. So if we do a sweep of the range trend, which is technically a bearish thing, that could push it up into that 173 area. And then if it started to pull back, then you're probably going to be going lower, sweeping, and then going back up again. So kind of like the range could expand to both sides. Okay. Right. Now this. I'm going to do a bit of work later today on seeing if we can figure out if there is a pattern to when things start to retrace back to trend. But this is a 103-day chart. It's a big one. Now, where the candle is closing, what could happen is we could test this trend, which is only about 155, somewhere about there, and we could bounce back up to the range trend, because effectively this is your horizontal represented level and this is your diagonal level. So that means that it could do a move between the 150s and the 180s. Now, if it pushes through the horizontal to test the trend, and that's basically referred to as a reverse trend dive, then it would push up to the backside of this trend, which is about 204. So this one thing could cover the whole range effectively based on the move that it could create. No other trends are moving, nothing's changing. It's reinforcing 259.8 as the breakout level for the entire top of the range. So certainly if we get up to that, de-risk your longs, right? Because I was on a live stream with someone yesterday and showing them how some of the stuff works. So someone who's going to hopefully help to make some better structured educational videos, because I'm a trader, not a video maker. And yeah, it blew his mind when he saw how these levels can just suddenly get hit and trigger what in the moment doesn't seem like a big pullback, because all you see is, oh yeah, the 4-hour candle rejected, etc. What you don't realize is it's the start of a 103-day candle rejecting to find support. And if it's approached it from the wrong side of the trend, there's no support. So, these are the kind of things that once we hit that or we go above that, anything that starts to pull back is very much, the start of a blow off top, like this one here. Okay, so that's all we've got for Sol. Just a very quick run through on some of the timeframes from yesterday. Trend is bouncing. Targets are in the 180s. Trend is bouncing. Targets are in the 180s. Trend is bouncing. Targets in the 190s. So some of these bigger moves that can take a long time to play out, and they can go down and they can go up, and all that sort of stuff. The ranges seem pretty clear. I hate to say it, there's nothing really saying that it's going to get to an all-time high at this stage, but it doesn't look like it's totally over yet. This one, now this is probably one of the more bearish ones from the other day. So this is the 170s into the whole candle from the range trend, which is bouncing now. So still pretty convinced we should see at least the 170s. Such a high time frame candle like this, if you've followed me for a while, there's methods we can refine these candles to find the greedier entries. So the greedier entries inside this candle is probably going to be somewhere between 176 and 204, or nearly 205. So yeah, it might just keep pushing, because we're already, believe it or not, up inside a really big one from here we go. This is the one that's showing one day we will come down to 121. Okay, but we don't know when. 77-day time frame, pushing up into the resistance. It's very, very subtle. To the eye, you wouldn't necessarily know, but the body of this candle is 155.092. The actual close was 154.952. That is a very tricky engulfment. It's most likely going to travel up somewhere inside this candle. If it wants to dump relatively soon, it's probably not going to bother trying to go above the body, because that kind of implies that it's over and it's reversing. So, that's a level of about 176. So, but yeah, given it is such a high time frame, it can go up. And that's what I mean by instant rejection. So that was when we hit the 210 level, after we had confirmed it as high time frame resistance by this candle here, which was the January move. That confirmed this. The next time we touched it, we just dumped 210, ended up going all the way back down to 131. Okay, so that is the equivalent of what they have done as far as structural creation at 259. Okay, so just keep that in mind. Boom, boom, boom. Okay, and this move's already trying to push us down. This is a 99, so sub 100 target could happen. Just keep it in mind. If there's smoke, there's fire. You can see the polarity of this 162 level, so it's a level that we've hit today. We've really struggled to push over it. Yeah, so that's something else to keep in mind. Now, it could go to the trend first, and bounce off the trend, which is about 141, and then it could come all the way up here to the reverse prior broken trend, which is about 189. So that's all possible. But this candle followed by this candle wants to go to 99. So just right. Let's have a look at BTC. Okay, so BTC on the daily, the close at this price point is okay. It's above a range trend. It's above the normal trend. So yeah, not a bad close for a daily close. What it hasn't done is it hasn't technically hard closed, because it's not distribution candle, and it hasn't technically recovered the 105 level. And the 105 level is very, very, very important, and you'll see that when we get to the 103-day chart. But if it closes here, the next candle is about 50-50. Okay, so you need a distribution candle with the body completely clear of the level to actually be hard closing a level. So as far as price recovery and how price recovery can work, it can technically get back over this 105 level on the daily. It can technically get back over this 106 level on the daily, because realistically the candle started from the top of all of this, started from the top of the range trend, started from the top of the horizontal levels. If the next day is positive, doesn't mean it doesn't dip, but as long as it closes positive, then the next day is also not a hard close of any of these levels. So 105 could reject, but if it recovers within 24 hours, it can go above. The range trend and the prior broken trend are sitting at about 105,900. The other horizontal levels there are at about 106,200 and 106,369, those sort of levels. It can do whatever it wants during the candle. So dip, pump, whatever, it's all noise. As long as it keeps closing up, none of these levels are lost. And therefore they are just a deviation for liquidity and capitulation. And then if it closes back up over it, it springboards off it and goes up. Okay. But we do still have daily trends to compete with. So, getting over 108, even if it was just in a single candle tomorrow, is pretty difficult, because we are still under the daily downtrends. As far as the actual target for the trend, the target for the trend as a complete bounce would be 108,254 or 109,412, as long as no other negative or hard close structure forms over the days as they pass. Okay, so that's where that's at. The 3-day close today. Okay, so the 3-day close today is Bungie caught back up inside its trend. This is pretty positive for potentially just an opening of the candle, a touch of the trend, and then a move up. Nothing is hard closed until you get up to 113.3. on the 3-day. So that's still good. As long as the daily just keeps on grinding up, this can keep going up. I was just thinking, I jokingly said to someone on X the other day that we could technically get back to all-time high by by the 5th of November. Instead, we've I mean, anything can happen up or down, but it could have happened by 105. Sorry, by the 5th of November. Ironically, it appears like it might just be where we actually hit the dump. Anyway, the hold levels, etc., up here are tested, but it will be creating another one here at 108, 108,200 today. So those are sort of the levels. There's a lot of confluence with maybe creeping past 105, maybe getting up to the hold level there at 108. We've got a prior broken downtrend, which has slipped back under, which is 109.4. Yeah, and then really the hard closed resistance levels are the backside trends. So that's 113. So I don't know, it could be in recovery. And that could be the trend sweep that we're referring to. So we will see. Okay, now big macro type time frame here, 103. This is the one I mentioned earlier. So when you create a candle that is designed to be the basis of a range, what normally happens is you create the candle and you close over what should form the floor of the range, which is what happened here. So the floor of the overall range on the high time frame should be 105,377. If we do have a pump in the next couple of hours and we actually close over that 105,377, the probability of us going back, macro, up, down, sweeps, blah, blah, all the lower time frame stuff can play out. The probability of us going up to all-time high is very, very big. In fact, the probability of us going one level above all-time high is really, really big. So that's a 124 revisit or a 143 blow off top. Now, if we close under the 105,377 today, then what is a higher probability is a rejection from up inside this area and a move back to test support trend or the base of the range, which would get us back to either this trend at about 96 or the base of the range, sorry, the hold of the range at 93,570. So this close is quite important as to where it closes. When I broke this down earlier, just on the lower time frame, so just chuck a trend in there and just put our little line in there. What I was looking for is ahead of this line, how did the price move after they started to form the range? So knock that down to the daily and just have a bit of a look back. This is when the range got created. Okay. The 1618 here at 105,370 should be the base of the range. The 124,481 should be the top. So after the range got created, it went up and hit the top of the range. So it was doing its job perfectly. It came down, but it never actually tested the actual base of the range until a second attempt at the top. And then we got the dump, and that was the October 10 candle. Personally, I think there's just something wrong with that candle. As far as the algos go, I don't think they see that the way we see that on some of these charts. I think actually this here was the test of the base of the range, which was the 17th. And then we've gone back up to the 50%, which is about the 115. I often joke about the 50%, but if you truly understand how ranges form, yes, it's tradable very easily, but you have to know how ranges form to begin with. And then this looks more like it's under the base of the range now. So yeah, if we close under that 105,377 today, the probability of a visit of the trend or the 93, so that's the 96 or the 93,570 level, is a higher probability for the next few days than that of a move to all-time high. If we creep back over this for today, then yeah, we're okay. And obviously we've got to keep an eye on and watch the other big timeframes as they close over the next few days, because any one of them can sort of creep up and in and then trigger the move. Okay, so that's the 103 day. And then just quickly, just a brief overview. Bounced, closed back up inside the support, is moving back up. This is the 2-day that we looked at from yesterday. So assuming it closes, wicks it for liquidity, starts to move up. So if you're trying to trade this stuff, basically it's about the close. The close pulled back up. This is on the 4-day. The close pulled back up above the support level, and I put it on here. I said maybe this is the range trend, scam wick October 10. So e.g. this candle shouldn't be looked at. Funnily enough, that's kind of where it's gone up to and rejected. So the trade would have been to ladder in on anything below the support, which it closed over as it dived the liquidity, and then TP at the first resistance. So that would have meant you were buying below 101 down to the trend retest, which was 99, and you were TPing up here. To be fair, I probably would have TP'd here. I would have TP'd at 101 because you don't know whether that is really meant to be on the chart or not. But this is kind of proving my point of I don't think that's meant to be on the chart. So interesting. Yeah, we are in a simulation. Yeah, and close back up inside the range trend, buy anywhere below the range trend, inverse resistance about as your first TP, but this still has a bit of room to move, so it may keep going up. That's on the 7-day. Sorry, I'm not saying numbers on these ones so much, guys, but and girls, but just it's more about just a brief educational overview about how you take structural closes on various timeframes, know where to buy and where to sell, and you kind of need to be looking at the charts to see what I'm talking about here. Closed up inside the range, bounced the trend, still got a bit of room to move, right? So these timeframes are actually pointing to sort of like the 106s, 107s that we've mentioned can also build from today's closes. Okay, closed back up inside the trend, started to move up. This time frame's a little bit, this one's actually pointing that we'll probably have another dive because it closed under the 1618 from the short. So that's pointing to, what we're thinking about. We might have another dip. By the way, it's a 14-day time frame. It's got 13 days to go, so that dip could happen anytime in that. Find some kind of support down here and then bounce back up again. It could even just do another test of the range trend. That's about 97. Bit of a dip of the range trend. I mean, worst case scenario, it does go to the level 2, but that's more of a sign of bear market, and that would be more of a sign of continuation to the downside, and that's around 88. Okay, and then this hasn't technically tested the trend, so again, another sign that we might have another dip. Kind of opened in the middle of nowhere, pushing up. Rejections probably around that 107 area through to 108, through to the highest possible 112 range trend. So these are all yesterday's ones. They're in motion. That's a little bearish. So 100, anything, if that does keep pushing up, 108 to 111, 400, and it's only really doing it because it's created a range trend. However, it didn't really touch that range trend, so that's also indicating maybe a sweep to the downside. So this one here, rejection still at about 105 or above. Yeah, 105, 107, anything like that. It's still on the wrong side of the trend, and it's kind of going the wrong way. The back side of the trend, which it's already touched, is that 104.2 level, which we started to pull back off today. So that's got a month and 14 days to go, guys. So, don't think it will necessarily do it tomorrow. It might not. And this is that level I referred to at the start that's basically set up for short and long. It's got support down here in that 96 and below in the same areas that the target is for the rejection. So this is capable of going up and down like a swipe the longs, go swipe the shorts, or swipe the shorts, go swipe the longs. Okay, and that's 1 month and 14 days left on that candle. Okay, this is already pushing up inside towards the hold. 77 days, big time frame. To put it in perspective, some of these 77-day time frames can take like 200 days to play out. So, it could be a while. We could go really high. This is also just that thing I mentioned about how if you cannot accumulate back to a trend, it becomes a stronger trend. Well, if you can't, if you can't distribute back to an accumulation or a support trend, it becomes a stronger trend. Just also bear in mind the opposite has happened up here. Okay, so we failed to accumulate back to the new rejection trend, meaning that if we push into the 130s or above, there will be more sell pressure once it gets up above there, more than normal, and could be, the end of things. And yep, we're still pushing up. So this is the 154 opened on the incorrect side of the trend. It's the first time we've really had a 154-day trend. The first touch of the backside of that's probably going to be about 106, 107 somewhere. You don't want to know where the support is. The support's down at 76. Okay, so that's a full blown reversal of the entire range we've been in since 76 based on this time frame. And when could it happen? Well, it's a big time frame. Anytime. Okay, so the easy time for trading was down here. And I know this might sound great in hindsight, but if you'd had that one line on your chart and we closed this candle, the easy time for trading was from that candle to here. So that was basically from the 35 Bitcoin up to the 69. And then after we hard closed this level, which by the way, we'll probably get a revisit one day, right? Then the easy trading time was this next little leg. And even this area here, to be honest, you're on borrowed time. You could have made an argument, because this trend didn't exist, you could have made an argument that you were going to at least come back to this and then have your first rejection. And as you can see, it wicked up through it and then rejected back below it, up through it, back just below it, up through it, back just below it. Okay, what do you think this one's going to do? Well, up through it, if it can stay above it, it creates a hold level here. That's game changing. You're talking extended cycle, that kind of thing, because you've got a means to break these trends. If it does just what things normally do, it's probably just going to come up to one of these levels or sweep it a second time and then come back to try and find support back here at like 76 and then 69 and so on. So just you can vote whichever way you want as to whether you believe in cycles or super cycles or that kind of stuff, but the chart basically says one of two things is going to happen: rejection off these levels, bear market, sweep of levels, well, probably one of three things: sweep of levels, bear market, or up and hold it up. And all it is, just like from a buying perspective or a trading perspective, is if the candle can stay up there, it just means people are happy to pay that price. And if they're happy to pay a higher price, well, the price is probably not going to go down. So that's all it is. So yeah, cool. All right, let's do a quick look at Tesla. And unlike yesterday, I've just made sure that this is recording the Tesla. Yesterday, I got a lot of comments there from people. What I did was I accidentally double-clicked the pause button. So I went in there to unpause it, ended up pausing it, sat here, talked about Tesla, and never actually had it in the recording. So I thought people thought I was playing a joke on them. Anyway, so what Tesla has done is we we had the rejection off the high time frame level, and that led us back to the hold. The hold has bounced. It's gone back to the high time frame level. So that's good. It's trying to get through there. But it needs to do a hard close for it really to be able to propel up to some brand new all-time high. It really has to hard close over this 465.33 level, or better yet, it has to hard close over the 467.25 trend, and then you've got the 471 level. So a hard close over those levels then allows it to propel up to the next level on the charts, which is more like your 488s, or a range trend retest up around your 497. Now, because this is the first touch of a newly created high time frame resistance, it is more likely that the candle actually goes down again. But it is also creating another hold level if it can close this here. So closing here, good. Most likely a pullback into the hold, the new hold, at about anywhere down here in that sort of 454 area. But if it can stay away from this bottom level here, which is the 443.69, if it can spend one day not distributing to that, then it means that buying pressure now outweighs a level, and that level becomes stronger support. So so more or less what is happening is this is a range condensing prior to a breakout. So you had here as your range boundaries. That would have been like something like this. Oops. Eek. You had this. Sorry, I'm saying this, folks, but this is again more a visual. If you're listening to it and not able to watch it, it's just maybe make a mental note to watch the little Tesla video on a computer or a TV or whatever for the visuals. But you had a range like this, and that range is moving to the upside. It's now kind of in here. Okay, and here, trying to make a top. And now what it's trying to do is it's trying to make a bottom here, potentially, if it can spend one more day not touching that level. So if your bigger range, which is this larger range, is now forming a new range higher, and then a new range higher again, this is how ranges collapse. So it's compression. The price isn't moving as much on a daily basis as when it was in the bigger range, but that compression often becomes that compression, next range, then it becomes that compression, next range, and then you're going, geez, it's boring, and I don't want to trade anymore as a day trader because the price is hardly moving. But what's actually happening, if you look at the bigger picture, is the range is moving in a direction. It's breaking in a direction, which means expansion then comes. Okay, so that's kind of what it looks like it might be doing. Now, at any point, it can reject one of these higher levels. Look at us grind up, getting all my alerts now. It always happens when I'm recording a video. So at any point, it can basically start to reject off one of those levels. And then if it does hit this 443.69 again on the next daily candle, then it's not creating the range base there. Okay, and then it starts to move down, and effectively it tells you what the top of the range is. There are potential areas where it can create the bottom of the range, which is sort of this 443, and then again at this sort of 438. Any of those can make the bottom of the range at some point, which I think this is currently down here at about 419 is currently the bottom of the daily range. So if it can make this into the bottom, then you're in that top percent. Then it might be some boring days, and then it might, so anyway, that's enough going on about that. Let's just have a quick look at that weekly. And yes, there might be a course. I keep getting asked about this stuff, so there might be something. I am talking to a guy at the moment. He's a professional content creator who makes this kind of stuff, and it's a lot of work, everybody. So yeah, it would seriously take me away from doing trading, which is kind of the selfish reason why I don't absolutely want to do it, but the way it's been spun to me is that I do want to help everybody, all the 600 and something people that follow me anyway, and it will actually save me time because I won't have to repeat a lot of the same stuff. People can do the course and then they'll understand, and then the videos can be shorter, and long term it might save me some time. So that's the way they've spun it anyway. They probably just want me to do it as much as everyone else has asked. Okay, Tesla Weekly, beautiful. Tell you what, it's going to become so easy to day trade charts once they all become 24/7. But yep, tested the hold, gone up over. If the week closes over the 143, then you'd expect expansion. Sorry, 143, 453, which is the 1.618. My brain is muddling everything together. Yeah, it's also retested or bounced off the range trend there. I mean, that's just a beautiful chart. You just couldn't get any more algorithmically controlled than what you're seeing there. I don't know who the human beings are that buy this thing, but the robots are buying it. They're trading it. Maybe he's got all his Optimus bots. Maybe that's what his big plan is: make a whole bunch of Optimus bots and get them to trade his stocks. Anyway, if it does hard close the week up here, then you'd expect it to try and expand the range up. So that's 477.76. If it gets really bullish and goes up over that, but this is a break level up here. That can be converted into the top of a range. So, it's all about once it hits it, does it close over it? Can it hard close it? Can it continue? That's basically what we're saying, but that's looking like one of the most beautiful charts I've seen in a while. Okay, that's us. Like, subscribe, please like. And if you want to hit the not like button, then at least put a comment in there and tell me why so that we can change stuff. Feedback is welcomed, good or bad. And yeah, come join us in the Discord if you want to talk about this stuff more regularly than once a day. And yeah, we'll catch you all again. Cheers. Bye.